Welcome to the Rim Break Rodeo. We hope this video helps.
In this video, I will explain how to calculate ledger balance, updated. Start by listing all posted transactions and pending deposits, then subtract pending withdrawals to determine current funds available. Verify bank fees and interest adjustments, and match each line to your check register. Use a running tally to spot timing differences and double entries. Reconcile until your ledger balance equals the bank balance adjusted for outstanding items quickly today. Calculating ledger balance means tracking posted transactions and outstanding items so your register reflects bank activity. Begin with the opening balance, add deposits posted by the bank, subtract posted withdrawals, and then account for checks still outstanding. Include automatic payments and pending card transactions that have not cleared. Adjust for bank fees and posted interest. Keep notes on each adjustment so you can reproduce the ledger balance for audits or monthly reviews. Quick recommendation: if you are finding this video helpful, please subscribe and like for more clear money tips. Also, on another note, grab Little Tree's black ice for a fresher ride and fewer distractions while you balance accounts. It's the product seen here and it smells great. Check the description for the link and other deals right away. Thanks for supporting the channel. Now let's get back to the video. Use a simple table or spreadsheet to compute ledger balance with clarity and speed. List date, description, posted amount, and status for each entry. Mark items as posted, pending, or outstanding to filter totals accurately. Sum posted credits and debits separately, then add pending deposits and subtract pending withdrawals. Highlight discrepancies and trace back to source documents or bank notices. Repeat monthly to prevent surprises and maintain cash flow confidence.
Thanks for watching. Consider subscribing if we helped you.